This is a presentation for insurance agents and financial professionals looking to get the latest facts regarding long-term care insurance. If you understand the facts, you'll understand your opportunities to more successfully market and sell this product. This is Jesse Sloan, Executive Director of the American Association for Long-Term Care Insurance. We're the national trade organization serving insurance and financial professionals who market long-term care solutions to millions of Americans across the country. The information that I'm going to share with you in this presentation comes directly from the 2012-2013 Long-Term Care Insurance Sourcebook. You can buy a sourcebook for $99 from the association, or it's free when you become a member. Your greatest opportunity in marketing and selling long-term care insurance is to understand that the market for this product is very defined. The analogy that I make is cars. BMW and Mercedes-Benz sell about 22,000 cars each every month. Not 1 million cars a month, 22,000 each. Their market is very defined, and the same is true when it comes to long-term care insurance. One of the things we need to understand in terms of the market definition is the issue age, or the age when people actually buy this coverage. And as you can see from our data, in 2011, over half, the vast majority of buyers, are between 55 and 64. That's the sweet spot of the age that you want to target and market, because they are your most likely potential buyers. Once you've identified and gotten interest from a buyer, you need to understand how to most successfully get them to purchase protection. And so what we're sharing here is one of the key factors that determines whether people buy or don't buy is the price. And there's a lot of misinformation out there about how long you need long-term care and how much coverage you should buy, etc. What I believe is important is to show what people actually buy, because that is sort of how they vote with their feet, or in this case with their checkbook. And the largest percentage of buyers in 2011 appear to be buying limited protection, a 3-year benefit. As you can see here, about 1/3 of buyers. The rest were spread across a wide array of the other options. And that percentage is up from 2010, because clearly buyers today are more price conscious than ever before. Because today's buyer is so price conscious, understandably so, one of the most important facts to understand is what's really happening with inflation. It wasn't that many years ago that everybody looked and said, oh, you have to have 5% inflation growth options with your long-term care insurance. And indeed, in years past, inflation was much higher and costs were rising. And having a 5% inflation option was also affordable. That's no longer the case. Today, 3% is the new 5%. And the big dilemma that people have as well, they're stuck sort of in the old paradigm of believing that without 5%, you should do nothing. If you look at the annualized home care and nursing home care inflation numbers, you'll see that in both cases, 3% is sufficient. And I will end with this comment for both consumers, again, and insurance agents. When it comes to long-term care insurance, some protection is always better than no protection. I pulled some great facts from the source book, and you can slow down and read them, but two I think are really important here that I'm going to focus on. One is clearly Alzheimer's disease is the leading and most frequent cause of claim for long-term care insurance, and it's the leading cause after reaching age 65. And I think that as an insurance professional, you need to understand that, because there is enormous awareness out there among consumers that if you live a long life, Alzheimer's disease, which is not curable, not treatable, is likely to occur. They've probably seen that in some relative. And so that becomes a key reason to start planning for long-term care. But the one right below it about cancer being the leading cause of claim below age 65, I think it helps to put the two of them together into perspective, because what it shows to the consumer is, yes, I might need this at an older age because of Alzheimer's, or at a younger age because of cancer. Both very prevalent diseases that individuals today are aware that they might get. Part of the source book also reports on an intensive study of why individuals buy long-term care insurance based on interviews with them. And I thought that sharing these facts are important for insurance agents and, again, for consumers to understand, because clearly this is what resonates with people. The largest reason that they bought is that the consumer felt the cost of insurance would increase in the future. And that is indeed the case. The cost of long-term care insurance goes up based on your age every year that you wait. So reinforcing that will help you as an insurance agent get more people to understand that that does happen, and is a trigger for them to seek more information. And as you can clearly see, in one of the studies that we've read, something like 90% of individuals who purchased long-term care insurance, they initiated the search. It wasn't because their insurance professional came to them. Consumers are worried about this, they're looking into it, and they're buying it when they think it's a good idea to have it right at this particular point in time. The last factoid that I want to share with you, because it really is one that resonates. At the association, we get dozens of calls every week from consumers, and one of the questions that they often ask is, okay, what's really the likelihood that if I buy this, I'm going to use this policy? And so for the first time, we had a study done that we published of what happens to people if they buy a policy at certain ages and they keep the policy in force, between when they buy it and assuming that they live and, until they die. What's the chances that they'll use their policy? And I'm sharing the two numbers with you here because it is important that if they added a 0-day elimination period, the chances that somebody's going to use long-term care before they die is 50%. It's enormously high. Now, most consumers, to keep their long-term care insurance premium affordable, put in a 90-day elimination period, a 90-day deductible. But as you can see, even though that does screen out some of the people who are going to need care, still a whopping 36% of the people who buy a policy at age 65 and don't cancel it will use this coverage. You cannot say the same thing about homeowners insurance or car insurance. This is an important piece of someone's retirement planning objectives and need. So in conclusion, if you're an insurance agent or even if you're a consumer listening into this, here's a couple of things that are very important. If you're an agent, targeting the right age of consumer and the right demographic, clearly important. The right age between 52 and 64, you want to get to people before they qualify for Medicare, and that's clearly because once we all qualify for Medicare, Medicare provides some great preventative exams that we all rush to the doctor. We're all going to get, all of those exams because they're free. Well, it's those exams that can uncover medical conditions that can prevent somebody from getting long-term care insurance, even though the medical treatments are going to keep them alive for many, many years to come. Focusing on what the majority of buyers are already selecting. That's really important today to one, tailor coverage to what the individual really wants, but often people start with what I call Cadillac products and then try to work their way down to make it affordable. In my opinion, one should start by looking at what the majority of people buy and then saying, okay, this is what most people do. Sort of like if you're buying a car, you want good, comfortable, reliable transportation, you might start with, with a Toyota or a Ford. And if you want to then move up the line, well, you can move up. If you want to move down, you can also move down. And then, as we talked about, delivering the right messaging for a new economy. Clearly today, the consumer is different than they were a few years ago because the economy, the market conditions are different than a few years ago. And understanding those conditions, focusing and reinforcing them is ever so important. If you're an insurance agent and you want access to the greatest marketing and sales tools and a copy of the full 2012-2013 source book, well, then you should go to the association's website, aaltci.org/join, become a member online, and we will put one immediately into the mail to you. Of course, if you have questions, you can call us as well. If you're a consumer watching this, you can go to the association's website where we have enormous information for consumers, and we do also accept calls from consumers, especially those who are looking to find a local long-term care insurance agent, a specialist that they can work with who is knowledgeable about this product and will have access to the top insurers. So in conclusion, I want to thank you for giving us your time and watching this presentation. Thanks.